So continuing on, Wednesday close and breakout, high close of the week or month, or low close of the week or month. And also just recognizing you're going to have instruments that show up on your watch list and they might have already played out in an earlier session. Like I mentioned, we're going to see different examples that just don't quite play out exactly how you want, or they break down earlier in an earlier session. But ideally, as I've explained to my sons, we want the sideways coil for the all-in collapse. And when we get those, they'll be zero stress, zero thinking, zero emotion, and zero management. We get the coil, we have our sideways behavior at closing price at the extreme, and the market goes till close. We showed an earlier example of first red day, and again, traders immediately try to go for a first red day trade, and the market may set up into a Wednesday close and breakout for a reversal opportunity, as we saw in the previous video. But bigger picture, we want to start to also identify first red day, first green day at extremes for these markets that continue to break down. So we have a Wednesday closing and breakout the following week at the extreme, at the high close of the week. Inside of, our thesis can now be that the high of the month is locked in place. We get our vertical close and breakout. Now, how does price behave on the day? Looking at our 4-hour chart, we have lower lows made at the beginning of the week before pumping up and closing in breakout on our Wednesday. And if we just bring our highest closing price of the month across, we can see that we're pumping up into our peak formation highs made at the high of the month. Now, how does price behave heading into our US session? Now, on this particular Thursday, we had a whole bunch of major red news. We had Euro major red news. We had Swiss monetary policy. We had German flash manufacturing. We had the SNB press conference. We had more British pound news. And then, of course, we had monetary policy for the British government at 8 a.m., 8:30, unemployment and flash manufacturing PMI. Now, with all that major red news, we still have the template in place, Wednesday close and breakout. We have a 1-hour entry engulfment for traders in the London session. We have our breakout again. We have our close and breakout, and our second breakout, our consolidation at the high of the week inside of our previous high of month level, an engulfment candle. So just understanding that if traders take this trade after the news releases, we still have a 1-bar stop. We can manage our risk. This is the 1-hour chart, so that's our worst case scenario. It's always about identifying the worst case scenario and then adjusting position sizing accordingly. Now, in this particular case, we have a vertical collapse on major red news, pullback, and heading into our US window, we again have a max stop loss area that can be defined as we head into our 8 a.m. US session open. But understanding the 4-hour rotation, currencies beginning their rotation 5 a.m. and then 9 a.m. So the close of our bull candle is 9 a.m. New York time. Now there's 9:45 major red news, but this is a trade setup that I would take myself. The low-hanging fruit continuation. We have our initial entry in the London window. So for my sons, this particular setup would be off the charts, but the template is there for traders who want to continue this trade, low-hanging fruit. If we have our coil in place, we can manage our risk. Now, how does our 5-minute coil set up? Building our muscle memory on a well-engineered template, and the same behavior, even with major red news. We get our coil, our new breakout, our coil sideways, the collapse on major red news in the London window, the pump up, closing price, the collapse and breakdown inside of a new peak formation high and peak formation low. Coil sideways, explosive move into the close of the day. ACB on the euro, even with major red news in both the London and the US windows. So we have our Wednesday close and breakout. We have our collapse in the London session on major red news. We have our pump up back up to closing price, a gradual collapsing and coiling sideways into our US window. The new 4-hour rotation at 9 a.m. Pump right in before our 9 a.m. engulfing, coiling sideways adding into this trade, entering into this trade, placing our stop. Once it breaks through, going to break even and holding till close. Breakout, consolidation, coiling, major red news, wait for the news to be released, positioning into the market, placing our stop loss, going to break even and holding till close. So there are going to be variations. There's going to be major red news on the calendar, but after the news is released, even with a 9:45 news release, we can be at break even prior to this news release, manage that trade to break even, and then walking away. Following the euro into the new month, we have a Wednesday closing and breakout high close of the week. We've had a very large move down. We've broken out of the low of month levels from February, and we get a Monday, Tuesday, Wednesday explosive close in breakout, taking out the high of our Monday and closing as the highest closing price of the week. It comes up on our watch list again. How does price behave on the day? Going down to our 4-hour chart, obviously we've had a very large move down, but the process is what's important. We have lower lows breaking the monthly and weekly lows as we go lower, and then pumping up and closing in breakout on our 4-hour rotation. So remember, the importance of understanding the 4-hour rotation is timing. When we come into our window, do we already have an existing 4-hour rotation in place in line with our thesis? Meaning that, do we have a coil now that's aligned us with a 4-hour maximum risk area? So if we've broken a level as we head into our window, whether that's Asia, London, or New York, that higher time frame is our max risk worst case scenario. Simple process. Wednesday closing as the highest or lowest closing price and breakout of the week or the month. And then how does price set up on the day? We look at our 1-hour chart. We have a peak formation low and a peak formation high, coiling sideways, breaking out again. And as we head into our New York session window, we already have a market now that has broken the high of week level and also engulfed and potentially now locked in our high of day. An example again of a maximum worst case stop loss area for traders in the London session. If they have a coil on their smaller time frame, we have a max worst case scenario on our 1-hour chart, breaking down and coiling underneath of that peak formation as we head into our US window. Now there's 8:30 unemployment numbers, which again on the backside can act as a catalyst to accelerate an existing coil trade opportunity. Just recognizing also that the week itself in this particular case on Friday closed in breakout. So we have a market that now is in breakout. It's week 3. We're down low, but we follow the process. Now I want to address a couple things about this particular setup. If we just go back to our daily chart for a moment, we can see obviously we've had a fairly large move. We're outside. We've broken out. We're trading down low. We're down low. So as opposed to trading up high, where we potentially now may be on the front side of a larger move, as we're up high, now we're down low, trading down into the low of the month level. So in terms of position sizing, this is obviously going to be a nail and bail opportunity, but needless to say, we follow the process. If this is the only pair that's come up on our watch list, I'm just trying to paint different scenarios for traders to manage themselves, but manage the understanding of when they have a 10-star opportunity versus a 3-star, but it's still a high probability ACB opportunity. We had major red news at 8:30, but when the market, before no news on the calendar, we would have positioned ourselves heading into that 8 a.m. U.S. session open. We got our coil sideways, our pump, and our coil. We would enter the market, but we had 8:30 major red news. As this market breaks down, this is the first bar opportunity on the 1-minute chart as it's breaking down. Now, I want to explain something about this. I don't need to go to a 1-minute chart. I can look at my timer, and as this market's breaking down, enter the market and still manage my risk. This is less than 12 pips to enter this trade even on the 5-minute chart. So once this market closes, we have our max stop in place and a hold till close position. It's a nail and bail. Once this market breaks down underneath of our initial collapse from the news, which is right near the end of the day, we've already had market breaking down prior to the news. a slow, methodical chart, but remember, we're down low. Now, this is why I want traders to build their muscle memory, recognizing that if you're shorting down low, this trade may have low range in terms of its risk reward. We're already now potentially looking at a first green day at the low of month level. A first green day, and we're trading back into it. This is after the market's broken out. So recognizing the difference between the trade setup up top at the beginning of a new month, we've broken out, we're reversing now, and now we may be witnessing the end of the sellers coming into the market and the beginning of the buyers reversing this trend, a first green day. So when we have a trade like this, we're looking at we might take the trade, it's a nail and bail. We're not putting huge size on this. And I'm just giving traders the understanding of when the template sets up. We follow the process, but recognizing when you're selling down low versus selling up high on this type of setup. A Wednesday closing and breakout, high of week. On a Wednesday, coiling sideways, major red news, it breaks down. We're just going to take what this trade gives us and walk away. And ideally, if we find an instrument that is set up more like the euro was in the previous month, up high or up high on a Wednesday such as this for a larger collapse, that's what we're hunting. So when traders have this come up on their watch list, recognize when you could be selling down low or buying up high. Still a well-engineered close and breakout, pump, coil sideways, major red news, and the collapse into the close of the day. I'm going to walk through some different examples. We're going to have months that just don't show us a Wednesday close and breakout. And for my sons, that's not a big deal. No signal, no trade. But there are going to be other months when other days of the week are going to give us the exact same opportunities, but it'll be a different day that closes and breakout near or at an extreme. And that can be affected by the economic calendar. We can have different high impact major red news events on different currency pairs, rate releases. We can have FOMC 2-part release on a Wednesday that can cause the entire month to sort of shift differently. And so as a result of that, we can look at some different examples of when this presents. We're looking for our Wednesday close and breakout and we don't get that, but we get very similar, exact same opportunities just showing up on different days. The same process applies. High close of a month or week at an extreme in breakout, or low close of the month, low close of the week in extreme in breakout. And then how does price behave on the day? The big thing with all of this is to recognize what an ACB template looks like as it sets up. There's no analysis paralysis, and that's really the whole point of repetition of going over these charts, is that you will start to see these opportunities show up on other days at the same type of setups, whether you're trading Asia, London, or New York, and then recognizing entry, stop loss. And if it's a 3-session setup in the New York session, it's an ACB, walk away, set and forget, hold till close. And that is the objective of the ACB templates, is a New York session, entry, stop loss, and hold till close, because it's not coming back. Hence the term ACB, it ain't coming back. And just remembering, when we have our 4-hour time frame, we have a market now that can give us an indication heading into the US window of whether or not we may have one of these extremes locked in place. And then using that higher time frame as a maximum risk area. So if we have our coil, whether you're in London or you're heading into New York, we already have our extreme locked in place potentially. And if that 5-minute coil presents heading into our US session window or whatever session you're trading, having a max risk area at the extreme. And we can use the same with the 1-hour chart. And just visually recognizing the escalator activity on the front side of the week. Escalator up, looking for the elevator ride down, whether you're going long or short. Now, as I mentioned to one trader, the majority of these trade setups are going to be reversals for short trades. There are trend trades, but more often than not, we are going to be getting the reversal collapse. And again, just recognizing the stair stepping up for the vertical move down. Go to our 1-hour chart. We have a nice sideways coil and an engulfment in our London window. This market starts to break down and we have our pin hammer reversal. Now on our 5-minute chart, we'll have a nice tight coil, but again, this is after major red news. Now again, this is an extreme now that can be used on our smaller time frame as our new 4-hour rotation is about to begin as a max stop loss area on the 1-hour chart. Now we have a market, again, just repeating the same things. Thursday close and breakout, high close of the month or week at the extreme. We have our coil sideways. It starts to break down heading into our US window, 8:30 major red news. The coil sideways, simple process. Entry, stop loss. When that market collapses down, we can project a level across, a close outside of that level for break even, and then walk away. Hold till close or a take profit level from the previous day. Now, this is just a larger pump and dump template, but it's an ACB template. It ain't coming back. It's hold till close. The same setups over and over and over again. Now, this is on a Thursday, but again, as I mentioned, we may have opportunities, the exact same setups, but because of the calendar, because of high impact major red news, CPI, FOMC, maybe an interest rate release on an individual currency pair, whatever that may be, there will be the same types of opportunities. They may shift or show up on a different day, sometimes on a Tuesday. At the extreme, same type of situation, week 1, week 2. Week 2 may establish a boundary for one of the months, and it gives a perfectly well-engineered ACB template, whether it's in the long direction or the short direction. And just building your muscle memory on what a well-engineered template looks like. Pump, coil, dump. Back to the closing price of the day. And the same thing goes in the long direction. And keeping it simple, once we have our coil, after news, entry, stop loss, break even, and walk away. The thing is to build your muscle memory and recognize what a really well-engineered template is, that once you're in the trade, it's hold till close. Entry, stop loss, break even level, and hold till close. There's nothing to manage on this trade. It's going into the close of the day. You're either taking profits at a level or you're holding it to close. You've gone to break even. If that market for whatever reason spikes or comes back or whatever, you're still going to get stopped out with a small profit. But pump, consolidation, coil, and dump. We'll see you in the next video, traders.